has traded at a premium to gold, partly due to gold's lower cost of production and partly due to platinum's strong historical demand fundamentals. Over these periods, the correlation is weaker. However, in recent times, with platinum in surplus, and gold and platinum are seen by investors as part of the same family of commodities. So they're both seen as hard assets with finite supply. They have relatively good market depth. Of course, gold has far deeper depth. And there is a transparent pricing mechanism with 24-hour markets. So in times of financial crisis, when policy responses lead to lower interest rates or higher interest rates, platinum follows gold, which sees platinum either benefiting or suffering investors' reaction and the treatment of gold as an inflation hedge. So while we expect this relationship to continue going forward, we can expect weaker correlation out further as platinum demand fundamentals dominate. Turning to the metal that does not have a correlation to gold is palladium. The dominance of gasoline engines is expected to prevail throughout this decade. So from 2021, automotive demand will make up 84% of overall palladium demand. And while we've seen a recovery in the other sectors, except for electronics, where there is still continued thrifting of palladium, we are seeing demand increase by more than 1 million ounces compared to 2020, and by 250,000 ounces compared to 2019. So as with platinum, this demand comes from the step up in vehicle numbers. Now we know the chip shortage does have an impact, and there is certainly some reduced demand as a result of lower volumes, vehicle volumes. But the higher vehicle numbers compared to 2020, and also the tightening of legislation, especially in our palladium dominant markets such as China, we are seeing a significant uptick in demand in the automotive sector. So on the supply side, while we have seen a healthy recovery, especially from South Africa, supply was less impacted during COVID for palladium as a result of the fact that we have a far greater dispersion, geographical dispersion of mine supply. So it was affected by about 288,000 ounces. And so we are seeing that recovery, we're seeing an increase of less than 500,000 ounces in palladium.
Global demand in 2021 for platinum, palladium, and rhodium is expected to go by about very close to 19.6 million troy ounces. It's interesting, last year, we estimated the global total value was about $37 billion. We are looking at now at $73 billion for the year. Platinum group metals are utilized basically in automotive, jewelry, investment goods, plastic, petroleum, air pollution, pharmaceuticals. The metals are provided to consumers through numerous supply channels, some directly, but mostly indirectly. The metals are sourced from mines as products and product outputs, and are also sourced through recycling. PGM sources are from South Africa, Russia, which are more than 80% of the global PGM source. The balance is produced in Zimbabwe, Canada, and the United States. Platinum, palladium, and rhodium are refined by PGM refineries. It's interesting because we have a base metal refinery, we have a refinery, and in the end, we get to the PGM refinery. We only have 3 major producers who have inside own PGM refineries in the world: Anglo Platinum, Impala, and Sibanye. In the PGM business, the most important thing is to get just-on-time delivery of refined PGMs. And overall, for this year, I would say the recycling seems to continue on the largely uninterrupted. We have seen a lot of interruptions in the mining output. We saw some in Russia in the first quarter of this year. We expect there will be some more, but it appears now the recycling is giving a very good support.
I wanted to take a look at the charts and kind of narrate what we see going on here. Palladium price really began to rise in 2018 as demand took off for automotive catalytic requirements and also jewelry. Palladium's used a lot in jewelry, and as people began to figure out the advantages of palladium over platinum, that is that it's has a lighter weight and a little bit better heat tolerance and easier to put in smaller and smaller catalytic converter applications, the price began to rise as increased demand flooded into palladium sector. Now, both platinum and palladium are very rare. They're more rare than either gold or silver, and the platinum group metals, including rhodium, are extremely rare to find. As stated before by Shock, most of our supplies are dependent upon South Africa and Russia, and both for different reasons have ongoing concerns with supply. So additional platinum group metal deposits are being looked for currently in Canada and in the United States as well. There are some promising potential deposits there, especially in Canada, but they haven't been brought to mind just yet. So we're really dependent upon other countries, and those countries have different issues with keeping supply coming to the market. So we saw a peak in the price of palladium in about January or so, February, early February of 2020, and then it fell off. Of course, we were dealing with the global pandemic and some shutdowns, a lot of uncertainty. However, palladium has since recovered. It touched on 3,000 here earlier this year and made a nice low recovery. Now the price has fallen recently. Part of that has to do with overall inflation in the economy, and part of that has to do with just some slacking demand temporarily in the automotive sector. But I feel as though the market for palladium and platinum both going forward are going to be very bullish. A note on palladium: if the prediction of substitution of platinum for palladium in automotive catalytic applications occurs second half of 2021, like the analyst we quoted stated, I could expect a little bit of weakness in the demand overall for palladium in the second half. And so that may mean that platinum starts to catch up a little bit, although I do think palladium will be the king price-wise here for the next probably 18 months or so.
So I think that the behavior between the two metals will be quite different. And the reason for that is because we are seeing that platinum continues to be in a surface at this moment in time. It's driven by investor sentiment. So I do think that we will see some a greater reaction in terms of or impact on platinum. But overall, as I mentioned in my presentation, we see investors see the platinum as undervalued. So certainly I do believe that platinum will be impacted more negatively than palladium. That is currently still, notwithstanding the substitution, which we all agree is starting to manifest more visibly. But palladium demand, I mean, it is in such a significant deficit, and we have seen this very strong recovery. And Robert also mentioned, you know, the growth expectations that we are seeing in countries like China and India. So my view is that yes, it will have an impact, of course, and we've seen that. It certainly will have an impact. There is speculative demand or speculative activity on palladium. I think that comes a lot more from the East, potentially, but I think that in our view, we see that the metal prices will because of the fundamentals, withstand the impact of the monetary policy changes.